Heard.
Yeah.
Dude, welcome back to Sufficient Funds. Tone, I've been broke for so long that it's hard for me to say sufficient funds. The name of the show we're on, my body just defaults. Like, I don't drink no more, but like when I go to a bar, it just like double kettle one vodka, rocks, please, with 2 limes. Like it just comes out of my mouth.
It's second nature.
Yeah, dude.
I don't even want this, but I have to have it.
So it just shows you like no matter where you are, there you're still the same you. I'm sure I messed that figure of speech up, but I just got this new laptop and it's all fancy, and it's got that touch thing with your finger where it just turns on because it knows your fingertip, and it wouldn't recognize me because I had cookies on my fingers.
I
was like,
you put crumbs on a new laptop,
bro. I got the cover. I got that plastic cover though. That's kind of fancy.
Oh, for jelly and stuff.
Yeah, for honey. when one of my nasty children touch it with their little nasty sticky fingers, man.
Oh man. Well, let me ask you a question. Is it hard? It's still hard for me. Like you just said, it's still hard for me to like even when I need a new laptop, like every 5-7 years, trying to re-up. It's hard to. Isn't it hard to even just make a purchase sometimes still just because of where you grew up and you're like, I know this is an investment in myself, but it's like. You get to the Apple Store, you're like, why do you need $1,800?
Dude, here's the thing. You're talking about like how you grew up. I think for the majority of the population, anything that's not an automobile or a home, if there's a comma in the price, you back up. Even if it's like an $1,100 couch and a $999 couch, it's really that not big a deal financially. But you like, dude, I ain't paying $1,100.
Dude, that comma will get you.
Dude,
that comma haunts you. You like, before we got on, you asked me if I was moving. I've been trying to, get nicer things, stuff I want to keep, all kind of stuff. And then I saw this chair that I was like, I searched like this accent chair down. I was like, I want this chair. And then I saw the price of that chair and I was like, I can't spend this to sit.
Bro, it's hard, but then here's the way I would justify that. And this is the way I feel like your adult mind has to start to justify things is, okay, the chair is expensive, but if you buy 2 cheaper versions of that chair that you don't really like as much, is it worth it? Like, what is it worth to you to have something that's nice, not something that's flashy, something that's quality that you use every day? I feel like a chair you can justify because you're like, I sit every day. You buying like a red leather jacket that you're gonna wear twice and get photoed in it. Now you can't wear it again. That's the ripoff. But the chair, if a chair is 10 grand, if you keep it for 20 years, it paid for itself.
And that's what like do you remember the luggage you were traveling with when you first started touring? Bro. And the luggage you have now?
Yeah.
It's like, and I ain't talking about flashy luggage. I'm just talking about you realize why you spend $250, $400 on a bag, because you go lifetime warranty. The construction is crazy. I mean, I've had wheels come off on bags and handles rip off, and I drop it right back off to Samsonite or wherever, or Toomey or wherever, and they give you a whole new bag. Like, hey man, this is what you paid for. And sometimes you have to step into that mentality of I'm investing in this,
dude. Especially for people that dude. You just brought something up. I'm gonna move. Sit tight once. I'm gonna show you something.
You had to get up on me.
I gotta get up.
Man, speaking of chairs, it's a nice chair out. That's not a cheap chair. You're gonna have that for about 20 years.
Thank you. That's my lawyer chair.
Yeah, no, that's good. That's good.
Dude, you were talking about
a leather weekender,
bro. This bag, I bought this. This is back when I was still drinking. I got hammered and walked into. I was down in Miami for what's that festival that they have? The wine and food one. It's got a crazy name. I forgot. But they have it every year. It's the real big festival they have. And I was down there and I walked into one of those Shinola shops.
Mm-hmm.
And this bag was $1,200, brown leather, got my initials in it. And I bought it. And, I regretted it like the next day. Like, bro, what did you just do? Son, I have used this bag every weekend. It's been all over the world. It still looks good. It still smells like leather.
It got better with age.
Bro,
Like it breaks in. Yeah.
it's a conversation starter. It's just like it's cool without being flashy.
Yeah.
Bro, I feel like I got a deal on this bag for as much as it's like, do you use it?
Right.
You know, that's
Right.
where it always should shake out. Do you use this, or is this
Well,
something?
then you don't have any worry. I mean, like, you don't know whose bag that is. It's a dope bag, but you don't know whose it is. But like when you catch a a friend of mine the other day was talking about buying like a LV, a Louis Vuitton carry-on with the print, with the signature print and everything.
Right.
And she's like, but I'm so nervous to take it on a plane or check it.
Yeah.
Like if I were to, somebody walk off with your bag, because like it's such a statement. Like,
yeah,
that's not an investment.
And they will.
You're investing in worry at that point. Yeah, they're gonna take it. I'd take it.
Bro, think about like what
I'm doing
Elon
fine. I'm
Musk
thinking about
be
stealing.
traveling with. He ain't got that. You ain't gotta, like, when you got dough, you ain't gotta throw it in people's face like that. Like, I think when you got dough, you got nice stuff, and only people that got dough. Like when you see like a watch and you find out it's 15 grand and it looks basic, it's like people that are into watches know what that watch is. Yep. And that's what makes it cool. It's not the fact that it says Rolex in a glowing hologram over it, so dumb people at the bar can still see that you got a Rolex. I kind of want to impress the people. Like, if you got a nice car, you want to impress car guys.
Yes.
Yes. They're like, oh, dude, they only made 12 of those. How'd you get that? That's what you want.
Yep.
So, I've been working on this theory, and we're gonna talk to our guest Nii-ama soon about this. I wish I could go back and tell my younger self, only buy stuff that you use every day, and the stuff that you use every day, go ahead and go ham with it. Like, I got a coffee machine that you would find at like a local coffee shop. It's got the little metal cow udder thing, got the metal thing with the shot glass. Yeah, makes that noise. And you know what? I drink 4 cups of coffee a day. The thing was only $400, but it's like, if this is what I drink $20, $30 worth of coffee a day if you go to the shop. So it paid for itself in like,
bro. Oh, if you one quarter.
Yeah.
I mean, in less than a fiscal year, that shit has paid for itself.
Do you have any purchases like that where you like, man, I use this every day, whether it was shoes? I mean, I know you like real frugal and thrifty, and that gets a bad rap, but I've always respected that about you.
Well, I mean, it's like, I was telling somebody this the other day. It's like, I don't spend money on things that I don't want or care about. That's what I spend money on. If I care about it and I want it, but I keep it around for like, I just don't blow money on shit I can't use.
Right.
Like, it's not a, I mean, I'll go to the Adidas shop, though, and I'll run up 6-7 pair of shoes right now, but 5 of them was on sale.
Yeah.
And I'll get like 5 variations of the same color, the same style shoe or whatever. And then 2, I'm knocking out like, they're going to be probably $300-$400 a piece. Cause I'm like, it's a collabo with Alexander Wang. I really want it. Like, and only sneaker people know, cause they don't say Adidas anywhere. Only sneaker people know, oh, you got that thing. Right. I only wear them sometimes. I mean, I got a pair of off-white. I don't even wear Nikes like that, but I have a pair of off-white Jordan 1s that are just fresh in the box. I'm like, this was an investment.
Right.
You know what I mean? Sneakerheads, like, if I ever get down and need $800, these shoes, somebody give it to me for these shoes.
That's right. And
they were going for $15,000 online at one point.
I can see you in a zombie apocalypse still haggling over the price. Like, I know you just killed somebody for your family to eat. I need $300 for these shoes, though.
I'd leave your baby behind to sell these shoes. I would covet these shoes. But yeah, I mean, I bought, you were talking about that bag. My bag is, I just bought a Toomey bag that's like, it's a backpack, but also it's a carry-on size backpack that doesn't look too big, but it's like lifetime warranty, waterproof. I have so many everything I wanted in a travel bag of like 2 or 3 days on my back. I don't have to take nothing out of it. It's easy and simple. And I think I spent like, I think the retail was $500, and I think there was a sale for like, it ended up being like $420 something. But for a backpack, that seems crazy. But like you said, I've already taken this backpack to London, Dublin, Dominican, Vancouver, Montreal. I mean, this bag it's got some stamps in the pattern, like, and it's perfect. Got my initials on it. It's perfect.
So get something nice for yourself.
I got the same bag at Marshall's for $40. No, you didn't.
Yeah. Yeah.
Let that strap break. See what Mr. Marshall gonna do.
You better take it right back to shopping with everything like scattered, which is why I love Marshall. It always just
That
look
came
like
with
the
a frying
feds just
pan
bought
in it.
it.
Yeah.
But dude, Tone, I wanted to, get into this before our guest, my homie, comes in. Like I recently tried to, I did, I sashayed, I soireed into the world of like stocks. And then like you ever gone to the dance floor and you get to the middle and there's like 4 people in there, but they like real dancing. They're like, you could tell they also
They
professionally
sweating.
dance, but then go to the club and embarrass regular people. And then you sashay out. That's what I did to the stock market. I went in there, got my butt handed to me because I don't know what NASDAQ. I still don't know what it. I just know the green arrow up is good, I guess.
The only thing I really know, let's be completely like honest. I mean, I have financial guys. I've made some money and I don't know how. Let's be real. It's like we cleared not extra 70 grand last year on and I don't know how we did it.
Yeah.
The money that was in there made more money, and I don't know you know what I know the most about stocks? The movie Trading Places, and orange juice is a commodity. That's it.
Yeah, that's what we're actually going to ask our guest that about like what are some of these movies? Because I want to ask them what was the scam that the Wolf of Wall Street guy was doing and stuff like I kind of want to know some of this stuff,
Oh man, absolutely. At least enough not to just have to change the subject.
Exactly, and not be embarrassed when one of your kids asks you eventually. So with that said, let's get our guest, my homie Nii-ama. What's up, man? You here?
Yes, sir.
What up, man? I haven't seen you forever, man.
How are you?
What's happening?
I'm good. This is my homeboy Tone. Tone, I've known Nii-ama since I went to Brown in 1998. I'm cool with his younger brother. We had his sister Nasa Clay on here, killing it.
Yeah,
with the shea butter vibes. So first of all, I'm glad we have you, but I think we need to have your mama on here to write a book called "How to Raise 3 Dope Kids." Like what? What?
You have to bring the cane in here too.
Dude, so we've been trying to get this going for weeks, man. You've been flexible with us, man. We appreciate that. And so we just want to get a little bit into like your background really quickly in the world of finance and the world of money, because there's people that are probably my age and Tone's age that are curious about it. But there's also some young folks watching saying, what is that? And what does he do exactly? And how do you even get your foot in the door for something like that?
Yeah, sure. So, Al, first of all, thanks for having me. Thanks as well, Tone. As you mentioned, started off at Brown, and frankly, I knew nothing about finance, knew nothing about money management, and I had the pleasure of running into a good friend now, then was a mentor, and we had a conversation about just sort of the expected trajectory post undergrad. And I remember he posed a pretty interesting question to me. He said, what if I gave you $1 million today? Would you be happy with that? Alternatively, I'll give you a penny today and double that offering tomorrow. So tomorrow, 2 pennies, the next day, 4, and so on. And, he capped it. He said, I'll only do it for 30 days. A young brother born in Ghana, lived in DC, very quickly said, I'll take that $1 million. I'm ready to go. And, it was a real learning moment for me. He walked me through how, in just 30 days, if I had accepted that penny, I would be at 5 million. If, one day after that, 10 million. So the notion that, compound interest very early and sort of, delayed happiness for actually preparing and being strategic about, wealth management could change a life really intrigued me. And that sort of, that sort of led me down that path. So started off my career at 60 Wall Street, JP Morgan, in debt capital markets. So issuing bonds for big companies.
Even how you're talking right now, I don't understand anything.
I was with him up until what's a bond, but you know what? I'm because I just nodded my head like, yeah, a bond. Okay. I was like, I'm bonded with y'all.
All
So
right.
what is a bond, bro?
Look,
Yeah.
you lost me at pennies, and I was like, I know that.
I'm like, and where's that dude now? I need to talk to him.
Okay, all right. So taking a step back, if you think about it, a company can either raise money in way of equity, meaning they give you or an investor a stake in their business. That way, you're sharing the risk, you're sharing the upside, you're sharing the downside. Furthermore, you take ownership stake in the company. So that's one product. That's what most folks are familiar with. So stocks. And that's equity. And then there's fixed income, in which case a company would essentially raise capital by providing investors with a loan, or at least seeking a loan from investors. So you would get a bond in replacement for the loan, the liquidity that you're providing that company. It'd have a fixed maturity, or you could keep it for as long as you like. Yeah.
Now, splitting those two examples up, just real quick, splitting that up between give me an example of that. Just, I mean, especially for viewers as well, also myself. So give me an example of company A, company B, equity, or an example that you have. I mean, you've seen this happen in your career. So like, can you walk us through simply an idea of that?
Yeah, sure. So most companies will, especially at this point, most Fortune 5 companies, even beyond that, in terms of size, when we talk about Fortune 500, would have existing equity in the markets as well as bonds, fixed income in the market. So in some instances, depending on how they're looking to capitalize, how they're looking to build their business, they could say, you know what, we want to raise set amount of money, but we don't want to lose, essentially, we don't want to lose, ownership stake in our business. We want to run this thing and operate it as sole owners, or at least maintain sort of the share of ownership that we have.
So is that me going like, I know we're dope. We got it. We want to bring some more money in to make some more money. And y'all see what we worth. That's our equity. Y'all know what we bring to the table. This is we hold you down, and we want to raise more capital. So we know we got the equity for you to want to buy in, but we still gonna keep some control.
That's fair. I like where you ended up, right? So if it's a Coca-Cola, Amazon, any of these folks, they're gonna say, hey, look, we want to raise capital, but we don't want to dilute shares. We don't want to give folks ownership of our we don't want to issue more shares of equity. We need to borrow money. So we're going to issue bonds.
Gotcha. See, there we go.
And a bond is fixed income. So that means you or I or Al can buy into that company. I say buy into that company. You can buy bonds, from that company. But essentially, you're just giving them a loan with a fixed return. It's typically lower than that on the equity side. You're sharing some of the upside if the company does well, but at the end, there's more of a guarantee around your loan than there would be on the equity side. On the equity side, if they go bust, you go bust. If you go on the ride with them.
But if they blow, you blow too.
If they blow you, absolutely.
Right. So even like as simple as possible. So let's say you're Amazon and I'm Al Jackson. My company is 6 foot, 7 foot. So I say, I'm going to give you $100. And you would give me a bond back, and you would promise me at a certain time you would give me $130 back. Would that be like, what's the percentage that you can expect back over a certain amount of time?
So fairly in line with what you'd see if you think about mortgage rates and things of that nature, 5%, 6%, 7%. You also pay dividends on an ongoing basis. So, it really depends on the security, and there's a wide spectrum. And when I say that, it depends on the security. I'm talking about how big the company is, its credit rating. So essentially, just like you and I have credit scores, companies have credit scores.
Okay.
And if you think about
now, so I gotta be honest, did not ever think about that.
That's right. That's right. Like there's Equifax and TransUnion for process individuals. There's S&P, there's Moody's, there's Fitch Ratings. These are companies that rate corporations.
Is that what S&P is?
That's right. That's right.
I had never knew with that. I thought that was just salt and pepper. I was like, shout out to Spinderella, even though she left. And and that makes sense because I saw that obviously because of this whole COVID thing, I saw an article like maybe 2 months ago saying that I think it was either Royal Caribbean or Carnival got their credit rating knocked down as a corporation. They're like listed as a AA entity or something like that. What would that be like if you lose It's just telling the investor beware of this company because they're leaking oil.
Yeah. So when you think about ratings, I think the best way to summarize them is really the risk of default. So the risk of default on their loan, their bond. So
Okay.
if you own their debt, that rating correlates with their risk of default, the likelihood that that company will not service that debt obligation.
See, that's what just happened. That's what just happened on episode 4 of Succession.
Oh, okay. Because I've been watching that, but then I don't understand everything. So I feel like I'm gonna go rewatch Succession back. Oh, I know what that is.
This is very helpful for me because so what happens is like they took out like basically a $3.2 billion loan that as long as their rating was good, they didn't have to pay this loan back. But as soon as it drops below a certain number,
oh yeah,
they owe this bank all their money back. It's like, yo, y'all not hot no more. We was rocking with you when you were the ship, but because now the ship is sinking, we gonna need our investment back, right? I mean, I feel like that's kind of what you're saying.
Yeah, that's fair enough.
All right, that's an example I got.
Yeah,
I like it. Way to bring it back to Succession. Now I'm gonna ask a question on behalf of just like an individual. If an individual is thinking about investing, just a general piece of knowledge, should they invest saying there are riskier bets, riskier investments, or safer investments, or should they look at it like they say, like when you give money to your homie, like just don't expect to get it back, and if you do, it's a blessing? Like, how should they look at it?
Yeah, the latter will definitely get you in trouble.
Yeah.
Although that's I would if that's where you're starting, you're going to be in good shape. You know, I would say it really depends on your risk profile and where you sit. You know, today we're young. I'd say, you know, mid-career for us really. So depending on when you're looking at retiring, depending on your financial position, your debt load, you may want to be on the more conservative side or err towards the more I'd say volatile or higher reward but also risk you know, profiled securities. So I'd say if you're starting and if you're young, you know, it's worth just jumping in. It's worth just jumping in, taking a look at a healthy slug of stocks. So that's ownership. In which case you can ride it up, you can ride it down. You have that downside exposure, but that upside exposure. I mean, the markets, you know, over the length of a century, you know, have performed at on average 10%. So that's not horrible. And granted, that's not a consistent growth trajectory.
Right.
The good years are bad years, but over you know, one's you know, life expectancy, especially if you're young and starting out, that's a decent rate of return.
Mm-hmm.
So, you know, I'd say you jump right in. I'll tell folks also, although there's upside to purchasing individual stocks, you know, they're also managed funds. So, you know, not by you. You would identify a sector, a subsector that you're keen on, interested in, or you just take a look at investing in sort of the broad swath of industries.
And that's kind of what I've been doing for the last like 6 years. It's like I will talk to my guys and they'll tell me where they think the market is going. And they say everything that basically you've been saying here for a while, but I also make them go back and go, now talk to me like I don't know what you're saying because I don't know what you're saying.
Right.
You know, so I'm like, let's just break this. Let me ask some questions. Let me highlight some things and we'll go through my portfolio, look at the ups and the downs with, like you said, what's volatile, how aggressive we should be, if we should be, you know, keep it stable or be aggressive. And so, but I'm also learning every time. Yeah. Every time we have these conversations once a month, I learn more. And it's almost like trying to learn a new language sometimes because it's even the way you deliver it now, it's so comfortable. But
yeah,
you know, but people should talk like this more. And even what you just said, I'm 26 years old. I got my first good job. I've stacked some money. We all know that savings don't make you rich, but like, you know, now I'm making 60, 65 grand now. I can, you know, I'm just moving to my mom's house. So I got money.
Yeah.
I want to make my money make money for me. What's a good idea if I don't want to, you know, because back in the day, look, man, we all about around the same age. Everybody, you remember late 90s, everybody was like, man, put your money in a CD.
Yeah.
Put your money in your CD, 6 months to a year. Hey man, you put in $1,000, you'll get $1,100 back in a year. You like, this sounds like a terrible idea.
Yeah.
So what's a good like first step if I'm sitting on 40 grand cash and I go, man, I'm willing to take 20 of this and just try to get my feet wet with thinking about my future.
Yeah. So the good news is, given where we are in the market right now, and as a society, rather, right? The markets have been performing relatively well, and we've seen a little bit of a rebound. But these downturns are sort of the biggest wealth generation opportunities that you'll find.
Right.
That said, there's specific industries that are a bit depressed or majorly depressed right now, all situational, given what's going on with the coronavirus, travel bans, and so forth. There's an opportunity to buy in at some of these blue chip companies and ride that uptick. In hopes, and again, it's hopes and speculation that at some point, especially if you've got a nice long investment horizon, there will be a vaccine. We will return to travel. We will re-engage with some of these industries that have been, effectively put on
depleted.
pause. Yeah. So that said, there are a good number of airline. Investing in individual airline stocks can be risky. Some might not have the liquidity position to last this downturn. But investing in an ETF, there's one called JETS, JETS. And I'm not advising it. I can't advise on what to buy, what not to buy, but it's worth considering. It's one of the few, I think one of two airline mutual funds, if you will.
Okay.
ETF. And, it's going for 15, maybe $16 today. You can invest in that and ride that up. I think before the downturn, it sat at sort of $30. So that's doubling your money. But again, you've got to wait till the market rebounds to realize some of those gains.
That's interesting. Now, we're talking a lot about the intricacies of the business and basically the overall structure. But you live this, man. Like, this is your life. This is how your baby girl eats. How you support your family and all that kind of stuff. So, talk to a young Nii-ama, a young Al, a young Tone, anybody out there that's just kind of maybe leaving college and looking to get into this lifestyle. What can they expect in terms of the lifestyle? Like, when are you waking up? When do the markets in Japan, in China or Japan open? When do you need to be at your desk?
I mean, is your alert always going off? Like you need to be.
Yeah. Like, do you have a life? Is it stressful? Like, what is it seems stressful. So like, is it? And if it was, how did you find pressure release valves for that?
Yeah. So within the broad umbrella of investment banking, there are numerous jobs, numerous profiles, right? There are folks in research who just research companies. There are traders and sales folks. Those are the guys you see on TV on the trading floor yelling and screaming. They're only working market hours. So once the market closes, 4:30,
they're done.
They're done with their day. An incredibly intense environment where, one minute you're on a high and next minute you're at a low. I'm at a rating agency now, spent some time on the syndicate desk in fixed income. So I had a little bit of a mix of all the worlds. And I think that spoke to my natural skill set. So relationship management, engaging with these issuers, engaging with the Coca-Colas, Amazons, and so forth, in theory, on their syndications. So, my day, look, I'm up typically around 6:30, 7 latest, just making sure I have a sense for what's ahead in terms of the news cycle, reaching out to investors, reaching out to the big institutional managers of our 401ks and endowments, walking them through, what I perceive to be some of the challenges they could face in the day. And then also programming informative webinars, talking about the retail industry, auto industry, food and beverage, and so forth. And then fielding their questions. So really about information flow, making sure that we're providing as much transparency as we can on what's happening in the markets,
right?
And giving as much, objective guidance, not buy, sell, but hey, here are some of the decisions and considerations you might want to keep in mind as you move forward with yourself.
This is a weird analogy, but it made me think about it just because you were talking about the airlines. I feel like you guys are kind of like almost like the gate agents that are at the airport, and you're just saying, look, the flight left New York. There's a little bit of weather. It might be real bad. They might have to turn around, but they should be here.
They should get there.
Yeah. So, and like people are going to yell at you like, what? But you're like, hey, that's in the air. So you can yell, but it's still, I'm not Thor, you know? So like,
absolutely. Yeah, we typically receive the lion's share of the frustration and disappointment, but we're not running these companies, right?
Right.
So no, absolutely.
Yeah, just
now,
that's interesting.
Now,
what did you say, Tom?
I was gonna say there's and I still don't know a lot about this. I can speak to it enough to know the terminology, I guess, but how this works, I really don't know. I mean, I think we've all, even if you're not in this business or as financially literate as you would hope we are or that we should be, but a lot of times we just don't grow up with this knowledge or seek it out in a manner in which we should. But there's a couple comics that are, or just even people in Hollywood that, you start seeing them. I've been at brunches where, a showrunner will just be like, excuse me real quick, and then have to go check, E-Trade or whatever, because they're thumbing a deal going through or buy or sell or whatever. And then, I've met people in the past that like Noah Garden Schwartz, for example, Noah.
Yeah, me and him wrote on the Shaq Show together.
And Noah, like pre-comedy, was very into trading stocks. There's a kid I worked with probably 15 years ago that was really big into penny stocks. But the thing with penny stocks is you can't sell on the open market. You have to find a buyer for your shares.
Yeah.
Whereas in the open market, can you explain what the difference between open market is when it comes to buying and selling, and what it means to have a buyer when it comes to something like a penny stock? And our penny stock is the only trade that's that way, as far as you have to have someone specific buy your shares from you.
Yeah, I mean, this all speaks to liquidity, and the universe of folks interested and available to invest in the more established companies and companies with stronger ratings and higher valuations is much larger than the universe of those willing to invest in companies with less liquidity, weaker balance sheets, and smaller in size. And also, when you think about it, if you're going public, i.e., issuing stocks, you have to be of a certain size, effectively,
to
even approach those markets. So those companies are the companies that you see traded on the floor of the exchange and so forth. And so it's really about liquidity. And it speaks to your friend's risk tolerance. I don't know that you need to do penny stocks, like I said.
I was we were probably early 20s at that time, but I remember it being interesting because I knew nothing about it.
Right.
Well, I'll tell you what I find interesting is we have a guest here that does investments in the billions of dollars, and you're asking him about penny stocks. I appreciate you embarrassing this show.
I don't know
what kind of
fan base you think we have. I don't know what kind of fan base you think we have.
Are you serious?
Why are you imagining that everyone that's listening is dressed like you right now? Everyone listening is dressed just like me.
So you got to start somewhere. I'm with you.
Yeah, it doesn't take long. We just look for a reason to start arguing with each other. So it usually doesn't take this long. So no, that and Tone, that kind of leads into a segment that I created just for you, Nii-ama, and I call this "Simple Questions from Simple Men." Just real easy questions, because Lord knows I don't know. Okay. So I know that you cannot recommend an investment, but can you give an example of a long-term investment and an example of a short-term investment?
Yeah. So technically speaking, long-term investment, anything that you hold for longer than a year, it's usually all of the instruments you've heard of: bonds, stocks, some of the things that might be, in theory, a little less liquid and tradable, if you will. Short-term investments are those with sort of set maturities, and also you'd hold for a shorter period of time. So you mentioned sort of a CD, money market, high yield savings, all of those sorts of instruments. T-bill,
those would be like 6 months.
Anywhere from 5 months to even a few years, frankly. But essentially, this notion that there's a set maturity And maturity being, there's an expectation that at some point you get it back with, set interest.
Cool. Tone, do you have a simple question?
I do have a simple question, and I guess it's back to the CD kind of thing with the because I mean, like I said, in the '90s they pushed those hard. People go, roll over CDs, and you remember that it's like, hey man, you set 6 of them up. You do 1 through January and June, and then by December you start reaping your benefits. But it sounded like I'm just rephrasing here, but like the simple question is, so a long-term investment can be a year to on down the line, whereas a short-term investment could be anywhere from, well, you said 5-6 months to just maybe a few years, right?
A bit of a misnomer, long-term, short-term. It's really
outside of like a commercial bank's offering on a short-term investment. Is there another example of a short-term investment like a
treasury bill, government bill?
Okay. Break that down. This is new to me too. What is this?
Yeah, you're just loaning the government money.
Really?
Yeah.
There's some power in that. I like that.
Yeah.
Government owe me. And like, what's the return on something like that? Like just like a government bond? I always wondered what that was, because I got bonds like when I was a little kid, but that was like $800, which is a lot of money. 1980.
But then your parents go, if we don't sell these, you'll have 900 by the time you're 40.
Yeah. I mean, these are some of the most secure, lowest yielding instruments out there. It's really almost akin to just parking your money somewhere. If you think about it, inflation's 3%. Depending on sort of, which maturity you're looking at, 5 years, 10 years, 15 years, 20 years, 30 years, there's a corresponding interest rate, for each. So, if you think about the spectrum, let's say savings, you're going to get as little back, and it's truly just an instrument to park your money in. Frankly, you may even lose money depending on sort of what inflation does, right? So, return on interest that you're getting in savings versus what the value of money is doing. And then you move on to your CDs, your treasury bills first, then your CDs, money markets, and then you it sort of opens up a little bit to the mutual funds, ETFs, and those sorts of products, and with stock all the way at the farthest end of that sort of volatility and upside downside exposure.
You're like explaining it's weird. You're explaining things on 2 different levels to me, because Tone, I'm sitting back because I'm old, so I like to watch a lot of like old war movies, like the Battle of the Pacific, like World War II, that kind of stuff. And whenever somebody would become a hero, like the guys that planted the flag, that famous picture where they like 4 Marines are pushing the flag up, and it's not all the way up, but it's like it's a monument somewhere. But those guys, they then brought them back to the United States and toured them around to sell war bonds. And so I'm watching like, what are war bonds? But I guess you bring hero soldiers around and let them do meet and greets, and then people buy war bonds, which is giving the government money to make more weapons. Okay. Yeah. That you just cleared up a lot of movies for me. And with that, I do want to get into a segment in Tone. I don't know if you've been watching movies about money, but I never
watching you go, yep.
Like it's all like my whole life, all these movies are like starting to kind of make sense that I watch in like
like Full Metal Jacket makes so much sense now.
Yeah, no, bro. It was like, like I watched The Wolf of Wall Street. We were just talking about that. He was selling junk bonds. Like, what are those? And like, what was that hustle? What did he ultimately get in trouble for?
Yeah, just pumping and dumping. They're responsible for actually they were at one point they started syndicating these issuances. So what that translates to is, company X needed money. They went out into the market. They said they can package up this bond or this stock and get investors to invest in this business, essentially investing in the company or loaning the company money through fixed income products, through bonds. They would then, in that process, market how phenomenally well the company is doing. They were actually behind the scenes buying inventory and sort of creating that, balance sheet that was picture perfect. And once investors would buy into the story financially, monetarily, they would essentially just dump their share. So if you think about supply and demand, the more demand there is for some, if I give you an apple today, you bought it for $1. If 10 people come to you tomorrow and say, we'll buy it for $1.20, $1.25, $1.50, tomorrow that thing's worth $3 and you sell it, you just made your $2. Same with stocks, same with bonds.
That's a great analogy. I mean, because like
offloaded.
Junk bonds sound a lot like what Boiler Room. Remember the movie Boiler Room?
Yep.
Right.
Yeah, I mean, like I'm selling something empty, really. Like I'm selling this idea. You believe in this idea. That the bubble might burst. We just don't know when. But right now, we can recoup, or we can attain so much and really have nothing to offer at the end of it. But we're thinking about today, not later, and nobody else's money. Whoever gave us their money is going to get fucked.
Yeah. And I'd say, you know, if you think about, and I'm no expert in cryptocurrency, but what you've seen with cryptocurrency, just the notion that pent-up demand, a lot of investing into paying this unknown. Behind the scenes, there are 1 or 2 or 5 folks who are sitting on these stockpiles. And so the moment they release them, the value of each currency collapses. And that's no different from any company. With just more regulations around, you know.
And really quickly, what was Bernie Madoff doing? And what did that? Why was that illegal?
Yeah.
I'm helping people avoid it because I don't know what that was. I would have fallen for it. I'd been like, yo, this dude Bernie Madoff gonna make me rich, y'all. You're never gonna see me again.
No,
It's like, what did he do? Why we hate him?
Yeah, standard. You know, it always baffles me how this Ponzi schemes are always going to be around, and they're not just in the financial markets. In Bernie's case, $1 you give me, Al, I'm using it to pay back Tone. I'm getting more money from Tone, and I'm using it to pay back you in dividends. So if I tell you, Al, you give me $100 and I'm going to pay you $1 a day for 10 years, and I continue to pay you that $1, you think that $100 you gave me is actually working in the markets. Meanwhile, I'm taking that $100 and I'm paying Tone, and I'm telling Tone, hey, look, give me $1,000. And so I'm building all of this, you know, all of the cash is coming into me, and I'm using your money to pay back, you know, someone else. And it just continues. And that in theory works until the market actually collapses.
And people want their money back.
So all of a sudden the market collapses. You want your money back. Tone wants his money back. I can't fundraise any more money. I can't bring anything else in. You know, and the entire Ponzi scheme falls apart.
A lot of people left on hold as you clean your office out real quick. Can you hold on? I'm gonna go get your money. Right, it is right. I'm looking right at it, Tone. Would you hold on? You gonna laugh? I can't. I left it in my car.
How'd you get my cell?
Yeah. All right. Well, you know, we only got this is our final question that we ask all our guests, and we appreciate you giving us a lot of time, man. But bro, I think, you know, this is a little behind the curtains, but our producer Alex just texted me like, I would pay to hear this. Like, this is so valuable, man. And so we call this segment Young Bucks. And so you get in a time machine, Nii-ama, and you're running into a young you, fresh faced at Brown University. Just probably had to tell me to not buy you another shot. And you know, you get a chance to tell your young self something about starting this career. What would you have told yourself?
Yeah. You know, that's a great question. I would say, let me say 4 things. 1, start stockpiling money into your 401k. This is outside of my career, just anywhere. Day 1. You know, the top 5 jobs or careers of millionaires include engineers, you know, managers, attorneys, teachers. And that's surprising for some accountants, obviously. But the notion here is that real wealth can be created through time and also through compound interest. And you have to make your money work for you, and you got to pay yourself back first. So that's 1. I'd say number 2, develop, identify, and really nurture your relationships, no matter what career you're in. You want mentors, but you also want sponsors. You want someone in your chain of command who, you know, you got their buy-in, and they're invested in seeing your career evolve over time. Number three, if you want money, you ask for advice. If you want advice, you ask for money. Keep that in mind, both professionally and personally. You'd be surprised at how that plays out in reality.
Say that again, one more time.
Yeah, if you want money, ask for guidance. If you want guidance, ask for money. Okay. And then I'd say number four, to the extent that you can identify your passion, what you're uniquely positioned relative to your peers to excel in, and leverage that to your benefit professionally, you won. Many of us enter careers which are interesting, they've heard about, they've studied, or they're on a track and they can't get off. Medicine.
That was me with biology.
Right.
I'm a stand-up comic and a talk show host. It's like I just felt stuck in biology. You know, I ended up going to grad school and running up a bunch of bills because I felt stuck. So yeah, man, you're talking to me right now.
And it's look, that's not even to say that these are wonderful careers too. But the reality is, if you think about it, at some point in your life, you were better than many of your peers at something. So you were already uniquely positioned to excel relative to your peers at something. So how can you nurture that? How can you really, feed that, right? Because that's what will position you in life, in your career, to be successful. I try to live by this, but you want to do in life what it is you would feel you betrayed yourself in life had you not done.
Wow.
I've been saying that, I mean, not in those words, that man, I have a little, I mean, we always got a little cousin who's just, he not all that, and even what you said 30 minutes ago about the $1 million, like that, I've told my little cousin that at the time he was like 22, and if I gave you $1 million right now, you'd be broke in 6 months.
Yeah.
Because you don't know how to, I don't know how to do it. So I know you don't know how to do it. I don't know how to make this $1 million become more. But I mean, right. and also what you just said is, hey man, you got to figure out what you're good at and that you will do and continue to do for no money, because that's where your money is.
Yeah, absolutely.
That is so prophetic, man. I think about it, Tone. You just hit on the head. What you would do. It's like when we started stand up, I remember the first time I got paid anything for stand up. I was hosting this bar show in Miami. And the owner came to me one day. He's like, "You got a $50 tab at the bar," and now that would be insulting. But at that time, I was like, I cannot believe somebody just gave me a burger and a beer to do what I love do. I remember staring at it like I can't believe that you can be compensated for what you love. And I think there's a lot of times we don't. Our parents as well don't really nurture that, not because they're hating, but because they're like, they just don't have the vision. I mean, think about how many people probably had the ability to be a professional gamer maybe 19 years ago.
Oh, man.
But that wasn't a thing. Imagine telling you, like, yo, Jamaican daddy, you about to be a professional gamer, and he's got 4 jobs. He'd be like, you need to get out of my face with it, And that's out of love. Like, no, that's not how I've ever seen people make money. But just because he hasn't seen it or your mama, doesn't mean it can't be done. So there is a little bit of, like, personal responsibility everybody's got to find within them to be like, if you feel like you can do this, if you feel like everywhere I go, everybody's like, dude, you a really good barber, bruh. Dude, you're really good, but you feel like you need to go do something else. If you feel like you're better than most people at this one thing, why not pursue it? Like, what's the worst gonna happen? Especially if you love it, man. That's just such great advice that we never give anybody.
You love to garden, dude. Like if you love to garden and you're into plants, you might be owning a string of nurseries across the country because like you dope and you cool, and I know poinsettias.
Exactly.
I know bluegrass. I know yucca. I know dogwoods. Like I know crepe myrtles. Like what nigga from the hood? I'm sorry. I'm not supposed to say this on the show. I apologize. But what dude from the hood play? You know what I mean? Like plays. Like knows crepe myrtles. What? Like who? You could have been the black dude from Cleveland that's good at frisbee. We ain't never seen one.
Bro, then I used to host a Guinness Book of World Records show. One of the dudes we had was the World Frisbee. I forgot what he's able to do, but that dude's a millionaire. He had thousands and thousands. Because are most people into frisbee? No, but there are 8 billion people in the world and 200,000 of them are. And if they follow you and they give money to you.
What's that bartender dude that was big on like TikTok where you just, all the
player bartending?
Man, and it's like, dude, this dude was like, I make punch. That's what I do. I got to figure out a way to want people to want my punch.
Right.
And this dude is a gazillionaire now because he cut up fruit and poured shit in buckets.
That's what it is.
But he figured it out.
But he did it with flair and realized people will stare at it if you make it interesting. So I think, that's a great note to leave it on, is like, not only now kind of understanding what to do when you do get a little bit of bread, a lot of bread, and you want to see what's up with it, but also like how you go about doing that. Because I'm sure, Nii-ama, you've seen people that are financially successful, but inside they hate every second of this, So like, it's also about like something, finding out what you're passionate about. And bruh, I done known you for 2 decades plus, and I've never seen you without a smile on your face, man. So you must be enjoying this life, bruh.
Oh, I'm trying, and it's because of interactions like this. I'm excited for what you guys are doing, and it's great to be able to share information and best practices with our community for sure.
Absolutely.
Dude, we appreciate you. You are family here on Sufficient Funds. We will be calling you back. We will be bothering the shit out of you. But dude, we really appreciate you, man.
I'll be here, brother.
Dude, all the best. And really quickly, how can everybody find you? Are you on social media, Facebook, any of that?
You know what? I keep a low profile. I'm with my family, and follow my.
I like it.
That's why he's just in a very translucent room with that swinging with the interrogation light.
Where were you on June 25th?
Oh man,
hey, I love it, bro. Just the fact that you don't have to promote your social media means that you won in life. That is the ultimate. When you got a private social media page, like, I'm good, I'm so good, I don't even need to. Y'all don't even need to know I'm good. That's when you're real good.
I don't need y'all finding me.
Yeah, we love you, bro.
Likewise.
Thank you.
Al, pleasure.
Oh, yes, see you soon, man. Yo, how good was he?
Yo, amazing. I mean, just the literacy he has about finance in that world is something we should all strive for, man. That's and those nuggets at the end, man. You got to do something that, like, whatever is going to be your bag, it's already in you.
Yeah,
everybody's better at something than somebody else. You just got to figure out how to exploit that. That was amazing,
bro. How many comics do you know, including yourself, that like you had a job? It wasn't like you didn't have that typical story like, I knew I had to do comedy to eat. You were eating. You were fine. And I'm sure, because I remember when I told people I was going to leave teaching to do comedy, they were like, they acted like I just said I was going to start practicing to be a serial killer. They were like, why? Are you crazy? You got 5 years in, retirement, another 20. You better, I was looking at buying a house in Miami. And so for me to make that turn and for you to make that turn, I just hope everybody can hopefully look at us and just be like, you're not going to starve on the street. I was told I was going to starve if I didn't go to college. Like, I really thought if I didn't go to college, I'd be homeless, dude.
Mm-hmm.
Like, legit. And I just think,
I was feared in the college myself. So I mean, I get that 100%.
Yeah, man. But yeah, he really just has some gems, man. And I appreciate him saying that, because the money is one thing, but just like figuring out what you're good at. And just like you were talking about that bartender, when you see what used to always kill me at bars is, like I always said, I could always tell when a bartender had bartender face, which means that they had dealt with so many drunks that they were dead inside. And even though they were smiling, it was so hollow, and they hated you because you represented every drunk dude, every girl that yelled at them that there wasn't enough gin in their gin and tonic and make it again, that they just hated every day. I want everybody to realize that, like, you can find a career that fulfills you, not just a career that's like, I'll make $500 on a Saturday night, so I'm going here and deal with these drunks talking about my boobs. Like, go do something that you love.
Yo, and if you keep chasing that bag, if you keep chasing that dollar, like just trying to find it under every rock, to eventually sit on that rock, think about what you want to do, and that shit'll run to you. It will come.
Dude, it sounds so cliche, but dude, we're living proof. And like you and I didn't have any, like our daddies weren't in entertainment. No one like grabbed us like, you got it, kid. I'm gonna bring you to Hollywood. I just wandered here.
Yeah.
And like
made a lot of mistakes getting here, but also learned a lot getting here.
Woo! One of my favorite lines ever from Kanye West. I really don't even mess with him at all anymore. But he said, "I made a million mistakes, but I'm successful in spite of them. I believe you like a fat trainer taking a bite or something." And I was just like, first of all, classic Kanye, such a dope line. But like, yeah, it's like you can still make it, even though you make mistakes. And I feel like my mistake was quoting Kanye West after he dissed Harriet Tubman. He's dead to me. Anyway,
great episode. I got moving to do, brother. I'm trying to invest in myself right now.
All right. Hey, I appreciate you, and good luck. And I know you got to sell some incense with what you're wearing right before you start moving. Good luck in your Spirit Pottery store, vegan restaurant. I feel like you got a good thing going.
Hey, just make sure you're at the store later. I'm coming to buy a mattress from you.
All right, bro. Be good, man. Talk to you soon, man.